Tim, good morning to you. Now, clearly, a lot of reforms are being talked about, and again, whether they're going to be implemented or not, but certainly, again, the yuan's recent weakness is a point of concern. But reforms, MPC, kicks off on Wednesday. What can we expect?
It's pretty interesting
Your
stuff.
crystal ball.
Absolutely. I mean, it's pretty interesting opportunity for the NPC to really take on a much broader importance than it would normally be perceived from the outside world. And, you know, it starts back with the third plenum in November, where with that event, there were 60 specific policy areas that were discussed. And we've seen a flow of several initiatives, you know, since then that start to give some action to those broad plans. The NPC could take that a step further, and it affects a host of industries, really all industries.
And one of that, of course, Shanghai Free Trade Zone is evolving, as we know. Over the weekend, there were some comments again what they're going to do to help bring in foreign trade, foreign investment. How does that fall into this story?
Yeah, well, I think that you think about Shanghai Free Trade Zone, it's one of several of these potential initiatives that are coming through. This is a test bed, certainly, for policy reform, thinking most notably in the financial area, where you've got liberalization potentially of the yuan and interest rates and other aspects of the banking business. The interesting part over the last 6 weeks or so is the further discussion that you could see another dozen free trade zones pop up around the country that are in the midst of an approval process. And, you know, the thought is there, if Shanghai is about finance and maybe aspects of technology and healthcare services, and maybe other areas would would take on the importance of other industries, whether it's shipping, manufacturing, technology, what have you. So, again, this is a place where reform can be a test bed for further expansion.
And market reaction so far, Tim, again, some of it's priced in, but the big one, arguably, is state-owned enterprises. Again, the power they have is really very strong. Will that be, in some ways, diluted?
Well, it's intriguing looking at the market reaction. You know, over the course of last year, the MSCI China as one benchmark, basically flat. Down 4% or so this year. You'd say, who cares? But there was a little bit of a spurt around the November plenum. More importantly, if you look at various sectors, much more notable reactions: healthcare, utilities, and specifically we're thinking wind and solar, being prime beneficiaries, consumer also taking off in certain ways. And that could continue. You think about SOEs as a group, there's 35 or so that we track that are A-share listed in Shanghai. Again, down about 4% this year, but look at what happened with Sinopec over the course of the last couple of weeks as they announced the potential sale of 30% of their retail units to private investors. That's exactly spot on with the type of policy that, you know, the reform and opening up from the plenum could potentially bring to bear, and that stacks up about 20%.